Thank you, everybody, for having me, the sponsors, and I'm following some really good speeches and whatnot. I'd also like to say we're delighted to be here. This is a really, really interesting subject that very few people know anything about, and hopefully I'll increase your education today. In answer to the previous speech, I'm 100% in gold, silver, and platinum. This is because we're so damn busy, I don't have time to manage things. We do buy all the stocks that we recommend. But we just don't have time to actively manage things, and we thought it was better just to put it there, know it's good, and leave it alone. And I like that. So I have the privilege today of actually giving you some ideas about where else to invest. We've been listening about gold, silver, and whatnot for a couple of days. We've heard a lot of really fascinating things, and very little of what I have to say about gold or silver is really much different than what you've already heard. I can say I'm in pretty much complete agreement with everything. So, I'm not going to talk about gold at a gold conference. This is a kind of interesting thing, but what I am going to do here, which is kind of important, is this. While you guys are reading my disclaimer, I have to make a second one, and this one's a little bit more important. I'm not politically correct. All you have to do is ask my wife. In this audience, I'm sure some of you can relate to this, but nowadays, when I go to a party with my wife, the last thing she says to me before I get out of the car is, you can't talk about this, you can't talk about that, you can't talk about the other. Now, I'm in a group here where you guys, how many of you can relate to this? I can't talk about fiat currency. I can't talk about anthropogenic global warming. I can't talk about Obama, and now I can't even talk about Ms. Gillard. So I'm not much fun at parties anymore. I'm always kind of afraid to step on something. Now, the other, and she probably, to my wife's credit, she's very clever. She's an Australian. But to her credit, she has pointed out repeatedly that I'm not my most fetching when I'm frothing at the mouth and waving my arms around. So she has a good point. So what we're going to do today is we're going to talk about these metals. And these metals are pretty obscure. But the interesting thing about them, and one last thing about political correctness here, I'm going to talk today about China. And there's some negative things to say about China, just as we have a whole bunch of negative things to say about the U.S. However, I'm pointing these things out in a different context, because a very big driver in everything that's going on today is simply the clash between free market and neo-mercantilist ideologies. And we're going to spend a lot of time thinking about this, and it's very important that we differentiate between the two. China has every right to do everything they're doing. In fact, we have encouraged them to do this. We are as responsible as they are. There is no right or wrong between the mercantilists and the neo-mercantilists and the free marketeers. The only difference is right now they're winning a little bit. And so we're a little bitter about that. So, when I talk about China, please don't think I'm China bashing. Don't get me starting about the U.S. or I will start frothing at the mouth. So let's just leave it there. However, it is a very critical driver behind these metals I'm going to talk to you about. Now, we've all seen this stuff. We all know what this is, and I just put these up here as proxies. Obviously, gold is rocking. Everybody knows that. Silver's up. Energy is doing great. And we can talk about all these things. The interesting one to me is I actually included live cattle here because we run an 11 commodity composite that we just track because we actually really do care what the consumer price index really is. We don't care about the government malarkey. And the composite is composed of wheat, corn, rice, soybeans, beef, pork, poultry, orange juice, coffee, sugar, and palm oil. We've been tracking these for years. And we chose to switch from canola to palm oil just because more people in the world use it. Now, the interesting thing is, in the last 10 years, that bunch of commodities are up 145% on average. Year over year, they're averaging 25.6% this year. Now, this is a really, oh good, I get to play this thing. These charts didn't come out very good, but if you see in the background here, the black areas in the background, that's actual production. We've got production in the bar graph, and the line graph is price. We have a very interesting situation over here in cattle. This is a major culling in the cattle price. Live cattle are only up 18% this year, and poultry is actually down 2%. At the same token, we're still seeing 25.6% year-over-year annual inflation. If you think this is not going up, you have a different idea about how markets work than I do. So there's a little free tip for you. As far as energy is concerned, the energy complex is just going to do what it always does. It's going to reflect monetary policy as much as anything else. And as this clash between the neo-mercantilists and the free marketeers increases, it's going to get more violent. There's going to be a higher incidence of it. What's going to happen is that people are going to pay a premium for oil supply from safe countries. Now, here I go. I'm not going to, my wife isn't here so I can talk about this. Oil sands are good, guys. The mining operations are bad. You know, we can probably say that's a bad idea because they're not doing very much on the remediation side yet. But the in situ oil sands recovery technology is really cool. It's really clean. In fact, in many cases, it's cleaner than regular extraction. But it's being grouped in with the mining operations. It's a steal of a buy. As far as energy is concerned, also we also have a very interesting idea on. We really like fracking technology. We really like horizontal drilling, but we don't like natural gas. Shale gas is a changer. So we've got all this stuff going on, and I just dropped my. Here we go. Excuse me. I think I'm the first person to do that. Novel. Is that me? Oh, good. That's my ringtone. Anyway, so I thought I turned it up. What we're going to do now is I'm going to give you the 2-minute pitch on why you should be investing in specialty metals. The simple idea is that specialty metals are a trend that people don't recognize. The reason they don't recognize it is because, one, it's a very complicated subject. The metal prices are opaque. It's very poorly understood. It's very hard to track. But most importantly, from our perspective, is it is both self-generative and self-reinforcing. Now, the consensus view here, and we're going to talk a lot about the consensus view. The consensus view essentially amounts to, especially metals are a small part of an emerging market and fiat currency-driven resource boom. Supply concerns, such as those we've just seen from the rare earth elements, that's no big deal. Market forces will prevail. We're going to come back to that comment. Now, still not any good. The ETR, that's my company, the Emerging Trends Report. Our variant perception is this. Get a grip, get a clue. These problems are entrenched, they're structural, and they've been decades in the making. This is not something that just popped up overnight. It's been coming, and it's coming hard. And when there's no quick fix, we just saw panic in the rare earth element market. You know, the rare earths are just one of many metals the Chinese control. They're just one of many metals that the Chinese are making very similar moves on. The neo-mercantilists have control. They've taken it, they've taken it, they've taken it. They absorbed the environmental abuse. They absorbed the cheap labor. They absorbed everything. Now they have control, they're going to get theirs back. If you think the free marketeers wouldn't do the same thing, you're crazy. That's the history. That's how money works. So, the bull market in specialty metals will translate into a bubble. I mean, it's translating into a boom before our eyes. And we're going to look at some charts here in just a second. But it's going to go into a full-on fear of supply disruption boom. And quite probably bubbles in many metals. Now, down here at the bottom, this is what we look for. The Emerging Trends Report looks at long-term trends. 6 years of operation have only identified 10 trends. This is one of them. And we're actually revisiting this. The trigger event here is actually, the rare earth element incident. First China cuts off supplies or reduces exports, and then they say, okay, well, Japan, you made us angry, you can't have any now. Well, I think that we will look back on this event. The watershed event of this will be Paul Krugman's Nobel laureate, his article in the New York Times calling China a rogue nation. Now think about this. The New York Times is one of the most liberal papers in the United States. They've been boosters of China for 20 years. And suddenly they've done a 180-degree about-face to come back and condemn them. So next in line, this is a really fun one. A couple weeks ago, China announced the end of the rare earth embargo they denied was in effect, which is really interesting. But the larger picture is, think about what they accomplished. This is very, very important. Think about what happened here. First and foremost, they tripled, quadrupled, and sometimes drove up the price of rare earth elements 6-8 times. They achieved a re-rating, a repricing of all the rare earth element oxides. More importantly, they sent a signal to the rest of the world, and that signal is simply this. You can use control of commodities to affect political goals, and this is big news. We haven't seen this since the 70s in the oil embargoes. You have to excuse me, I'm so pumped up on antihistamines, I'm fairly vibrating up here. So, we're going to run through this really quick. This is a chart, this is actually a chart out of the same publication, raw critical minerals to the EU. Everybody's seen this chart, it's very interesting, it's really cute. But you know what? In the last 2 months, that chart has just shifted entirely. Everything in this chart just got ratcheted up one whole level. I would have you look at these metals. I think, whoa, cool. Oh, that button. Everything from tellurium up in this industrial group just went above that line. For those of you who are aficionados of the mockumentary, this is Spinal Tap. If you look at rare earth elements up there, well, they just became a 6 on the EU scale, the AU amplifier. The point is, this is the consensus view. This is what everybody believes, and nobody, I don't know what these people are thinking. I honestly have no idea what they're thinking. This is what the findings of the EU were, down here at the bottom. Except for gallium, indium, and fluorspar, 60% of these metals are concentrated in 3 or 4 geographical regions. They use geographical regions because they don't want to say countries. The demand growth for specialty metals has yet to dawn on major mining companies, and the EU does not have enough mining companies to respond. Now, the interesting thing is, they include BHP as a European company. Astounding. Anyway, but the big one is, down here at the bottom, it says, market solutions will prevail. Now, throughout this presentation, every time you hear me say, or you see the words, market solutions will prevail, you should think the Bobby McFerrin song. Don't worry, be happy, because it's absolute pablum. Honestly, this is, you have a lot of things to worry about. Now, again, we are not bashing China, okay? But here's 2009. This is what they're telling us from these publications, USGS and the EU. 97% of the rare earths, 91%. You can go through the whole list here. They got a big chunk of global production. And you can say, yeah, but they're industrializing. They need all this stuff. And you'd be absolutely right. But by the same token, they're also expanding their manufacturing base into value-added production. And they're doing so in some very controversial ways. Now, just so we're clear and everything, let's take a second and contrast the free marketeers and the emerging markets as exemplified by the neo-mercantilists. The neo-mercantilists are all practicing essentially command economies. They're telling, the government says to the people, we want you to produce, hell, we'll use rare earths. That's a great example, everybody knows it. So the country, starting in the 80s, goes after rare earths. Now, they want to take market share. But think about it, who are they taking market share from? They were taking it, when they started on their rare earths quest, they were not taking market share from the other command economies. At the time, India was a command economy, or the USSR was still around there. They weren't taking share from Cuba, from North Korea. They were only taking market share from profit-oriented free marketeers. That's where it's always come from. And we let them do this because, we had environmental justifications. It's dirty to do that, mining's bad, yada, yada, yada. And it's cheaper to buy it from them than it is for us to produce it ourselves. Now we're in a situation where they control it, and all this wonderful technology that we take so for granted is utterly dependent on these metals. Now, I am not trying to scare you into doing anything. You understand this. You know in your heart what's going on here. Everybody does. We're pretending it doesn't matter when it really does. Now, the last 2 weeks, the Chinese have announced they're going to start a strategic metal reserve. Of these metals, and by the way, we just stopped at this cutoff at 23%. The list is more than 40 metals long. We just wanted to get some of the kind of cool ones in here that you guys could all recognize the names of. Of these 10 metals they're putting in their strategic element, or the strategic metals group, their reserve, we have the rare earth elements: antimony, tungsten, germanium, indium, molybdenum, tin, gallium, tantalum, and zirconium. The last four weren't on this list, but they have a big part in production. This is a very serious threat, and I don't want to sound like I'm sensationalizing something, but what we just saw with the rare earth elements is one of many metals that they control. You can look at this list. If I were you, I would think right now tungsten, antimony, zirconium, tellurium, those are all very good investments because they've been doing the same thing. The parallel is exactly the same. They took market share, they undercut everybody's prices, they closed mines all over the world, they took market share, they've very gradually been raising export taxes, they put tariffs on things, and then they just cut the exports. And all this does is, if you want, right now, it's rare earth elements, if you want access to rare earth elements, you have to go to China to produce. Well, it's very interesting. A very good contact of mine just dropped the bomb on me 2 days ago that the Japanese have absolutely decided they are not going to take their vertically oriented production to China. They're not going to do it because they are absolutely terrified that their proprietary technologies and processes will simply not be proprietary anymore. Now, Japan is a very, very large producer of goods using rare earth elements. They are scared to death. We have a similar thing going on right now with tungsten. China controls 80% of the world's tungsten. I hope you all know tungsten is used in high-speed cutting tools. I'm going to come back to it in just a second. But the idea is that they've just gradually been increasing these taxes to where it's too expensive to buy it outside of China. So you've got to go to China for supply. This is becoming bigger and bigger and bigger problem. So, ta-da! Here are the 46 metals, and notice we don't even include gold in here. We take gold out. Well, we think gold is the only way you can really save money in life in terms of long-term purchasing power is through physical, so we don't even count that in these metals. Even though a very interesting chart I'm going to show you in a minute, that's from 2010, says that 12% of gold production is now used in electronics. That really surprised me. Anyway, so we've identified 5 different kinds of threats, and you'll see there's 2 that are green and 3 that are red. Sovereign risk is fairly self-explanatory. If you want to go start a mine in Venezuela, good luck to you. I won't invest with you. Scarcity of supply just means it's rare. Platinum group metals are rare. Tellurium is rare. Rhenium is rare. Gold is rare. There's just not a lot of it around. Then we have this no substitute category. This is really interesting. It just means there's nothing that you can use in its place. Now, when you think I just mentioned tungsten. In high-speed cutting tools, there is no replacement for tungsten. You cannot make steel without manganese. Obviously, you can't, without neodymium, you can't make permanent magnets. We're going to talk in a bit about ruthenium. That's one of the platinum group metals. You can't make hard disk drives without ruthenium. There's no substitute. So on the one hand, you've got essentially anything with no substitute is price inelastic. That means they have to have it no matter what the price is. There's no 2 ways around it. And that category is much larger than you imagine because the more sophisticated technology we bring to bear in alloy use in particular, the more specific the application gets. The next category is byproduct source. A byproduct source just means that it's not a metal that's mined on its own. For many years, until 2006, if I remember correctly, most silver came from byproduction. It wasn't a primary metal. Most of the global production was byproduct. This means that it is supply inelastic. Silver, by the way, is now mined primarily. But my point is that you have metals like gallium, indium, germanium, tellurium, even silver to a certain extent, that are byproducts. If the price of tellurium goes up, they're not going to produce more copper to get a little bit more tellurium. Tellurium is a byproduct of copper manufacturing. And this last category here is called dissipative use. This means that you just consume the stuff. Now, there are two classic examples here. One, everybody's familiar with silver. You got silver and RFID tags, deodorants, bandages, people popping pills. None of that comes back. It's gone forever. Another good example of a dissipative use is in antimony. Antimony is a fascinating metal. You can ask somebody a trivia question. What is the only metal that does not expand when it's heated? That's the answer. It's used in fireproof clothing. It's used in upholstery on airplanes, boats, cars. And it's just thrown out. You can't recover it from that way. Now, so you look at all these different threats. As you can see, I've got sovereign risk and dissipative use in green. Now, the reason I put those in green is because there is something we can do about our risk to those threats, controlling our risk to those threats. You couldn't pay me to invest right now in Venezuela. I wouldn't do it with your money. Interestingly enough, I wouldn't invest in South Africa right now. That makes me very unpopular. But you need to understand that the people I represent and our readership, our subscribership is very, very conservative. A lot of old money, a lot of big money. And what they do is they will not tolerate any sovereign risk. So about 5 years ago, we switched all of our sovereign risk to pretty much we just limit everything to North America, sometimes a couple things in Europe and Australia. That's it. We don't go anywhere else. We'd rather be safe than sorry. I do agree. Somebody made a comment yesterday in my delirium. It came piercing right through. You've got to be crazy to invest in U.S. markets right now. I would agree with that 100%. We do not have one U.S. holding right now. In fact, the only holdings we have are the companies that we're recommending. And we keep those in our little seed fund in the States to track what we're doing to prove that we ain't lying about our performance. So when you look at all these metals, you can see that every metal on our list had to have at least 2 threats before it qualified to get on the list. The average is actually 3. Some of them, some big ones, have 4 or 5. And we're going to come back and talk about these in the context of what we're doing here. So let's get some of these industrial metals out of the way first. This is a category of specialty metals that's very easy to understand. And the reason it's to understand is, hey, we got all these emerging markets, we got China, everybody's developing, you can't industrialize without these metals, there's no two ways about it. That's easy to understand. Very easy to understand. But the returns are pretty substantial. This is over the last 10 years. And you can see they've come up, all of them are way up, they're just starting back up. Now, I don't think there's anything that you can really account for that. We've had increasing supply all the way up on all these metals. Everything is cool. You would think price wouldn't be this far out of hand. We would submit that part of this price driving is the simple fact that these are metals that are under threat. Just to remind you here, 56% of the world's magnesium is produced in China, 25% of the world's manganese, 81% of its tungsten, 39% of its molybdenum. I don't think you can deny a relation there. How much you want to do with it is up to you. Now, here are some more obscure metals. These are the ones that are kind of fun. I just mentioned antimony because antimony is like the poster child for everything that can go wrong with metal supply. There used to be antimony mines all over the world. The Chinese undercut the price. They had big supplies to start with. Now they control the market. Flat ass. There's no two ways about it. They even control the smelting, and they just have a really big hand in everything. So antimony, which is used in far more things than most people recognize, in addition to clothing and upholstery, things like that, it's used extensively in lead-acid batteries. You're getting it now in semiconductors, fiber optics. The big use for this is going to be in phase change memory. I don't know if you guys have memory sticks, but as you know, if they fail catastrophically. The next generation memory is called phase change. Intel and everybody's developing it. It uses both antimony and tellurium. We put niobium up here because niobium is a poster child for a single source metal. Fascinating stuff. We used to make alloys and refractories. Really cool stuff. When you learn about this, I'm sorry, by way of background, I'm eminently qualified for this. For 20 years, I taught American literature and film. So I should have included that in my disclaimer. But what happens is you get interested in stuff and you start reading about it. You don't have to be a scientist to learn what these things do and to find out what's going on in the markets. There's lots out there. The internet is great if you can get past the fact you have to throw out about 70% of what you read. But there's a lot of information out there. So anyway, niobium is really cool stuff. The reason I have tellurium and rhenium both on here is one is that the tie-in with tellurium is actually rarer than platinum for you guys that are interested in such things. But its entire supply comes from byproduct copper. It's found deposits are very, very few and far between. If you look at it, they're only producing, 200 tons a year. We're talking about using microscopic amounts of this in specific applications to achieve a certain blend of performance in a metal. It's really cool stuff. And the reason I have rhenium up here is I'm going to come back to rhenium in a second, but rhenium is really neat because you put rhenium in superalloys. They started doing it in third-generation superalloys, and what it does is it allows the operating temperature, especially of high-performance, high-temperature equipment. You're talking about jet engines, power plants, things like that. It allows the characteristics of the metal. They blend it with usually a nickel base, and then they have tungsten and molybdenum and everything else in it. And they make this really cool stuff. But what it does is by getting the blend just right, you end up in a situation where that metal can operate at far higher temperatures. If you're a jet engine, that means that not only is your operation temperature much, much higher, it means you get a more efficient fuel burn. It means you produce less pollution. It means you get better mileage. But the crazy thing about rhenium is it takes these alloys and it makes it insanely unstable. It's the weirdest thing. It just makes everything unstable. And so for some peculiar fellow in the late 80s said, you know what? If we add another really, really obscure metal to it called ruthenium, everything works. It stabilizes the whole effect. Now we're going to come back to ruthenium in a second because we're going to talk about hard drives. Now, as you notice, I mentioned tellurium and rhenium are both byproducts of copper. What happened for the big increase in tellurium production, they got a new way of extracting it. But the interesting thing is, the price of rhenium has not recovered from 2008. Now, of course, we know Ivanhoe's got a great, Little Wizard and Merlin deposits. It's got massive rhenium and molybdenum. It's all really neat. But I would suggest to you that the reason that the tellurium price has increased, even though supply has gone through the roof, is that's telling us that electronics are doing better than aviation right here. That's rhenium's primary use is in aviation. So, these are the basic drivers, and we're going to talk about two of them in particular. This is the primary one, and we all understand industrial drivers. For the specialty metal drivers and the technology side of things, these are the main drivers. The idea of the endless pursuit of higher quality, ever more efficient devices at a lower price, last time I checked, that was the definition of capitalism. That's all there is to it. Few people appreciate the role these days that material scientists and metallurgists play, but none of these metals are new. We haven't discovered any new metals. All we're doing is we're finding new uses for them. But what happened to make this possible, something really cool started happening in the 1990s. We had an absolute explosion in processing, in computer processing power, and it got very widely disseminated very quickly. And then starting about 1996 and 1997, there was just an exponential growth in the technology and the software of analytical and modeling software. So now we've got massive processing and we've got modeling technology. And the third step came out in 2003. In 2003, they found out a way to increase the data density while decreasing the cost per gigabyte of memory. You put those three things together and what happens is you have the recipe for just expansive, explosive growth in the use for these metals. That's what's driving it. Quite literally, the more these guys look, the more they find. This trend has just now started. My phone's turned off so I can wave it around. Think about this. This has got between 45 and 75 specialty metals in it. Think about that. This was a better computer than the last laptop I had. And I carried around in my pocket and it's a third of the price. It's unbelievable. So, as I was saying, these performance characteristics, especially in alloys, this is the real sweet spot in this technology, the metallurgy-driven technology boom. They were achieving all these things with metallurgy in alloys. Ever smaller amounts of ever higher performance alloys. It's really cool. We've got this lack of substitution and absolutely minuscule amounts of these specialty metals, and that makes them all price inelastic. This is what everybody thinks is driving the price of these metals. It's only one part of it. They're price inelastic because they only use a little tiny bit. It doesn't matter that the price of cerium just went up 600%. That's completely inconsequential. It's price inelastic. We only use a little tiny bit of it. We're going to come back to this concept. The scarcity of byproduct sourcing means that it's supply inelastic. So what you have is all these things that are really should be driving up the price of these phones, and instead capitalism is actually driving the price down for now. The interesting thing is that research and development in the technology field does not correlate with GDP. Think about it. Its entire demand trajectory for these metals are driven by discovery. They are not driven by GDP. These technology companies are looking at next generation or 2 generations down the road projects, 5, 10 years out. They don't care what's happening right now. And then you get to the bottom here, and you cycle and go back up to the top, and you repeat the whole thing, only faster. Now, we can talk about these things all day long. Let's go back to this ruthenium thing, or this rhenium thing for a second. I was telling you how they found out that you could use ruthenium to stabilize these superalloys to allow them to operate at higher temperatures, to make them more efficient, cleaner, faster, raise the thrust-to-weight ratio, the whole 9 yards. What happened was, in hard drives, let me skip down here a bit, in hard drives, since the 1970s, this top technology is longitudinal recording is what we use, and we use that from the 70s through to about 2003. The reason we used it was because it was very, very stable. But the bits were all stacked like this. They're all stacked on a platter, side by side. And what happened was, we just ran out of space. This is a exponential, for those of you who are chartists, this is an exponential chart. We just started running out of space. We can only get so much data onto a 3.5-inch hard drive. Now, since the 70s, they knew that you could stack them vertically. They knew that you could stack it perpendicularly. But the problem was, it was highly unstable because the temperatures that the hard drives achieved destabilized the magnetic effect to allow you to record and retrieve data. In other words, they became worthless if they got hot. So, I don't know if it was his cousin or if it was just a lucky guess, but somebody said, you know what, they used ruthenium to stable rhenium. Huh. And voila. They now sandwich all hard disk drives, and on these 2 platters, they put a base on this, and this is a platter. In here, there'll be between 14 and 16 different metals. Above it and below it, to stabilize the whole thing, is a 3-atom thick layer of ruthenium. Without it, the whole thing goes to hell. So that's how they started perpendicular storage. They started getting substantial increases in our data flows, in our data storage. What they found also was that ruthenium stabilized it so much that they could increase the magnetic effect of the metals that they're using, of the materials they're using, so they could pack the stuff even denser. So if you look at this chart, you'll see that, hey, we're up here at 3 terabytes on a 3.5 disk hard drive. 3.5 terabytes, that's like the Library of Congress, guys. This is just wondrous stuff. It wasn't, it's unbelievable. And this was done just because somebody realized, okay, well, this minor platinum, did any of you even know that ruthenium is a minor platinum group metal? Everybody knows about platinum and palladium and rhodium, because those are the big ticket items. But the other 3, the minor ones, are osmium, iridium, and ruthenium. And these ugly siblings were so unwanted, and they are so difficult to extract. They are so difficult to extract. It's fine chemistry, not processing like we think of it. That for many years, the South Africans just kept the concentrates and didn't even bother taking them to metals. No joke. When they pull up ore, they start the processing thing, and it takes 180 days between the time that ore hits the plant and they get ruthenium out of it. They literally take every single thing they take the nickel, they take the gold, the platinum, the palladium, and when they get all done, there's some smoke left. And that's ruthenium. Honestly, they literally precipitate it out of a gas after everything else is gone. And those are the last three that are gone: osmium, iridium, and ruthenium. So there was a method to... So we've got this use that came on now in third and fourth generation superalloys. Now they found out that it saves the day with hard drives. Well, they're doing research right now on artificial photosynthesis with ruthenium. Artificial photosynthesis is kind of a snazzy term for sophisticated solar. But the one that I am fascinated by is they discovered that, guess what? Your body thinks that ruthenium is iron. It interprets it as iron, so it does not attack it. So what they're doing is they're building ruthenium nanolattices to put these massive, highly toxic doses in very small amounts on these lattices, and they're injecting them into your system. They're using like a guided missile, because the cancer, in particular cancer, is just like a black hole. It's eating up all the energy around it. It's consuming everything around it. All they have to do is get this targeted missile, this nanolattice with a very highly toxic ruthenium in it, cancer drug in it, and they get sucked right in. Boom, problem solved. Obviously, it's a dissipative use. But the potential here is stunning. And this has all happened since 1995. And the possibilities are just stunning. So, let me move on a little bit here. This is from Christian Hageluken. He's a friend of mine who works for Umicore, who does very sophisticated, very good chemistry. But this presentation he made up in Brisbane was very interesting. If you don't find this surprising, I think you should really check your brain somewhere. We've got 30% of silver uses going into electronics. We've got 12% of gold use. Those people who tell you gold doesn't have any use, it just sits there, it's inert. Ask them what they're smoking. You get down here to ruthenium. We went from zero production to 32 tons a year now, and 27 tons of it is going into hard disk drives. Alloy use is going to go up when the aviation industry picks up. Any of these other new uses kick in, it's really going to take off. Go through all this. Antimony, 50%. There you go. Bismuth, selenium. Now the interesting thing is, unfortunately, of these metals, let me just read you the list of the ones that have some aspect of sovereign risk attendant to them. Palladium, platinum, and ruthenium. As I mentioned earlier, South Africa scares me because I think the march towards Marxism has broken into a full-on gallop. Between them and Russia, there's your platinum supply. You get down to antimony, bismuth, selenium, and indium. Well, that's all China. And this recognition of how much of these things are played, how much of this use is involved in the electronics industry or the thermoelectrics industry. Well, the interesting thing is that here's your biggest driver for this trend. It's e-waste. We don't recycle anything. According to Gartner, 305 million computers were sold globally in 2009, 96 million in the US, and we're supposed to be in a depression, right? 1.211 billion cell phones. 4 billion of them are in circulation now. But look at this. In the US, we throw away 112,000 computers every day. We just throw them away. They end up as toxic waste in landfill. 35 to 45 metals, depending on the computer and the sophistication of the computer you're throwing away. They are deriving, recyclers are recycling, they're recovering 4 metals. Because in a computer, what is it? 86% of the value in a recycled computer is found in, this is respectively, by the way, gold, palladium, silver, and copper. Those are the metals they just throw away. Literally, they just throw them away. We've got all these cell phones. 383,000 cell phones are discarded every day in the US, 10% are recycled. Well, it's even worse for cell phones. Cell phones use between 45 and 75 different metals. 93% of that value is recovered in those same 4 metals, respectively. It's a phrase now for recovering precious metals in dumps, in waste. It's called urban mining. 200 grams a ton for gold out of waste. Mobile phones, even better. 340 grams a ton, 3,500 grams of silver, 14 grams per ton of palladium, and 130 grams per ton of copper. If you found a mine like that, your stock would be exponential, right? But we don't do any of this stuff. Now, you know, you've got to excuse me here because this is the ironies R Us portion of the show, guys. Here we are with, everybody knows that recycling is good for you. You know, it saves money. There's less greenhouse gases. And those of you who have any sense at all actually know that metals are infinitely recyclable. It is the most purely sustainable resource we have. But environmentalists oppose mining and they throw their shit away. That's what happens. We all do that. And the scary thing is, this is a self-reinforcing cycle that's underneath all these metals prices, and nobody is even paying any attention to it. And it is probably going to be, you know, more rare earth element incidents that's going to make people start cluing into this. But it's already happening. The funny thing was, you know, it was actually funny. I was actually expecting something like the rare earth element embargo that wasn't. I was actually kind of expecting it to come from tungsten, and if not, probably antimony. Rare earths just kind of took me by surprise. And we're in this stuff every day. By the way, those are our predictions for what's going to come next. So, this is the self-reinforcing part of this cycle. We've got this situation where we've got, you know, new users are driving new demand. Everybody's got to have the latest, greatest gadget. They've got to throw out what they've got or put it in their drawer and get the newest, greatest one. And what's happened is that the lifespan of our electronics is on a very sharply downward spiral. Over the last 15 years, we've been averaging about 4.1 years per computer. That has now fallen to 2.3 years per computer. Cell phones have gone from 2.9 years of use before replacement to 15 months. Here's your demand driver. Now, just to be fair, and I'm not plugging Christian's company, but one of the interesting things about companies like Heraeus or Johnson Matthey or Umicore is everybody thinks of them as scrap recyclers, and that's that's like calling the Titanic a dinghy. They're not. They're very, very extremely sophisticated chemists. Now, Umicore, according to his presentation in what was that presentation? I think it was in July of this year. They can now recover 95% of the contained metals in electronics. They can recover 95% of it. That is what is possible. We are not mandating that it is. Until we make a change to mandate it, that this recycling occurs, this problem is just going to get worse. You know, I'm going to get rich, metal prices are going to go higher, but at the same time we're just screwing everybody and everything. They can recover 95% of the metals contained, including gold, silver, platinum, palladium, ruthenium, rhodium, iridium, copper, lead, tin, bismuth, selenium, tellurium, antimony, arsenic, indium, and gallium. An investment or a listed company like Umicore or Johnson Matthey 10 years from now is going to be an investment in an urban miner. We invest in them, but right now I don't have anything in them because I don't have anything in the U.S. So this leads us back to this. Okay, this is where my wife needs to be here wiping the spittle from my face. And I will try to, we're going to be talking about rare earths a lot today from a lot of people. But this is a publication called Business Insider in the U.S., and just to make sure that the ignorance is not only universal, but it's also a pandemic, global pandemic. There's an article in the Sydney Morning Herald this weekend that said the same thing. This is just mind-stunning stuff. The fact is that China is loosening export restrictions. How many people believe that? Raise your hand if you believe that. They are tightening export restrictions on the things that count. The things that count are the rare earth oxides. It's only a $1.5–2 billion market. It's probably up 4 or 5 now because they just quadrupled the prices of these things. But the point is, those are the building blocks upon which all this cool high technology is built. Of course they are reducing the export tariffs on the products when they leave the country because they already suck the people in to build them in the country. They don't want to cut off the buyers. They want to drive manufacturing there. We would do it too. This isn't right or wrong. This isn't moralizing. This is how money works. But you've got guys who do things like this. They're loosening export restrictions. That is the height of disingenuity. Down at the bottom, this one is really a fun one. How many people believe this? So basically, it's just a matter of extracting them from the ground, and when that starts to happen, this excitement will surely fade. Does anybody believe this? This is stunning. This is mainstream, guys. This happened to be Business Insider, but it's in the Sydney Morning Herald too. They concluded saying, essentially, this is the last paragraph. Essentially the same thing. So let's take a minute and get the basic lesson in rare earth elements. 1, he's absolutely right. He's got one thing right. Rare earth elements are not rare. They're everywhere. That's not a problem. But after that, you can take the rest of this article and throw it away. 2, every single rare earth deposit is absolutely unique. It's like a fingerprint. There never will be a generic flow sheet. That's not going to happen. And this is because, in addition to the 15 lanthanoids and scandium and yttrium, you probably got it with phosphates, uranium, thorium. Suddenly you've got this stew of 20 different metals, and the quantities in each one is going to be different in every deposit. So anybody who thinks there's going to just be a CIL plant you can apply to rare earth elements, they're really lost the plot. Next thing is, at least 2/3 of the cost of producing rare earth elements is in the processing. I was just down at Whyalla looking at Arafura's new site location, and they're talking about between $1 and $1.3 billion for their plant. The scale is astounding. And this is after they're trucking their stuff 1,500 kilometers. They're not trucking it, they're training it in special cars because it's a level 2 radioactive contaminant. So, anybody who tells you this either is telling you a lie so they can drive down the price of the stock so they can buy it cheaper, or they drank the Kool-Aid. Now, speaking of Kool-Aid, Mark Twain once said that a mine is a hole in the ground with a liar standing next to it. And if there is one metal today where that is absolutely true, it is with rare earth elements. Our guys have come up with roughly 700 companies in the world are claiming to have rare earth elements. 700 companies have doubled and tripled their stock price by saying, and everybody's run after them. Our considered opinion is that if by 2020 there are 15 rare earth element producers outside of China, I will be stunned. I think it'll probably be lucky to be 8. I do believe, however, 3 of them are going to be here in Australia. Now, there's going to be a lot of talk about rare earth elements today, and in this rush to not be concerned anymore. We don't have to be concerned about it anymore. It was in the media. The government's made a statement. We can relax and be happy now. The problem's solved. Market forces will prevail. Well, according to the U.S. government, the congressional research analysis just came out. They said that we're operating in a 10,000-ton deficit this year that the Chinese are graciously supplying us. And between now and 2012, that deficit is going to grow to 56,000 tons. Now, by our calculations, if Linus, Molycorp, Alkane, and what was the 4th one? There was one other one here. Hold on, let me get my list. No, Arafura is after 2012. That's it? Oh, 5 minutes, good. Oh, good, I'm almost on time. To cut to the chase, there's Linus, Molycorp, Alkane, and Great Western Minerals South African project. If all 4 of those come on, these are big ifs. Now, we're going to string together a whole bunch of ifs. If they can come on stream, if they can produce stuff other people want to buy, because you need to remember, You only get so far, and you have to take your product to somebody who wants to buy it. So you have to send commercial samples to people who want to use your stuff. And a lot of times they ask you for different purities and this, that, and the other. But if all of these things happen, we'll only have a 24,000 ton deficit in 2012. But wait, it gets better. By 2015, we'll have Arafura, we'll have Linus Stage 2, we'll have the second Great Western Minerals Project in Canada, we'll have Avalon, and then if you really want to take a leap of sovereign faith, you can go with the Japanese Toyota's venture in Vietnam, Sumitomo's venture in Kazakhstan, and Stan's venture in Kyrgyzstan. And if all of those guys come on stream, and all of them come on and get there in time, then in the end of 2015, we'll have a 36,100 ton surfeit. But that doesn't include any growth from 2012 on. Right now, we're growing between 15 and 18% a year. We will clearly be in deficit. So you need to be really worried about all the pablum that's out there. Now, I can wrap this up pretty quickly here. We've got history saying that after every single great economic dislocation in history, there has been followed by protectionism, resource protectionism, nationalism, you name it, they steal it. We've got the clash of the free market, neo-mercantilist ideologies. This is just now coming into people's attention, and it is getting worse. When you got people in the New York Times calling China a rogue nation after supporting it for 20 years, guys, wake up. That is a watershed moment. We've got relentless demand. For the industrial metals, we've got not just China. China isn't the only country that's expanding or developing or industrializing. It's happening all over the place. We've got these threats that are marginally under investor control. Well, that's why I'm in Australia. I only invest in Australia and North America. And right now with President Obama, he drove me down here a year early. I wasn't supposed to be here until March of next year, but I was so afraid by when he got elected, I said, okay, let's move it. Project finance in Australia, well, project finance generally is improving in Australia. It's tight. It's still tight. Project finance is down 30 to 40% from 2007 levels. The simple truth is that unless you're a pretty good-sized company, unless you've got a market cap of 300 million, unless you're producing a metal that is hedgeable, a metal that is hedgeable is one that is listed on a commodity exchange. Unfortunately, none of the ones we're looking at are on the exchange. It's very difficult to get financing. Now, most of you are Australians, and most of you take for granted the unique geology that you have. This is the most stable continent on the planet. It's been stable longer than anybody else ever thought was possible. And one of the things that's been a result of that is that Mother Nature, water, heat, wind, has done a lot of your initial processing for you. This is why you have such rich deposits. This is a very, very important thing going for you. My opinion is that there's a wall of water leaving Europe and the United States. A wall of water, a wall of money, I'm sorry, liquidity, water. Have some more drugs. A wall of liquidity that's coming this way. I think it's absolutely safe to say that you guys are going to get a lot of resource money. The more exaggerated, the more this gets, once the press gets a hold of something, for Christ's sakes, stand back. The stink will kill you. But you're going to see Australian mid-cap producers, they're going to become feed pretty much. Merger and acquisitions are just going to explode. We think that the microcap deposits and the microcap historic mines are very, very interesting here. They're interesting for a number of reasons. The first reason is nobody loves them. Nobody likes them. You got a market cap of less than $100 million, there isn't an analyst in the country, unless you pay them, they don't cover you. So people aren't looking at these things. A lot of these deposits are just flat-ass world class. They're stunning. They can't get any money for it. So you're going to see a lot of private equity money come in. You're going to see a lot of really interesting things happen in that space. These microcap historic mines, this is the bonus round. This is like, I don't get it. Let me see. Let me see. My mine was profitable in 1986. I was making tungsten left, right, up, forward, and they cut the price. My mine closed. Now I want to restart a tungsten mine that operated for 100 years. We know how much it's got, and it can't get funding? What's wrong with this picture? There's a lot of companies that are like that. So the other advantage, let me just run through my list here and wrap it up, because I'd actually like to take a couple questions. These things aren't covered. They're very poorly understood. The markets are horribly opaque. Okay, you need to be aware of what you're getting into with these metals. You got to believe your story, and you got to be willing to stick with it, because there's a lot of mis and disinformation out there. It's a massive opportunity, but when it comes to these microcap historic mines, the interesting thing about these things is that none of them were closed because they ran out of ore. They closed because the price got cut off. They got cut off at the knees price-wise. Very interestingly, most of these projects have a tremendous amount of infrastructure in place. Some of these mines even have operational, valid environmental permits, mining permits. They've got power to the property. Some have roads running through them. And nobody will touch them because they're not mainstream. So, I guess that about wraps it up. If you have any questions, I'd be happy to take them. I appreciate your time.
No, I'm not here to get rid of you, Richard. I'm here to say two things. Firstly, thank you very much for a very insightful presentation. We will take one or two questions, but I also just want to make note to all of you that Richard will be on the panel discussion with some other North American colleagues that have come out specifically for this event. And these guys are extremely knowledgeable in the resources sector. So that panel discussion is after Mr. Dines speaks this afternoon. We've got a microphone. Have we got any questions from the floor? Come on, guys. Here we go. Right. We'll take Rudy at the front first.
Hello. Is that working? I'd like to know, what is your product? Because I'm very interested in the things you had to say.
Well, we changed our business model when we came out.
It's okay. Go that way. Problems when you've got too many microphones on all at the same time.
I'm sorry. What we do is we write long-term reports. Actually, you know what? Here, you can read all about it. I'm sorry, while we're answering questions. There's one more. Whoop. No, go back. There it is. There you go. I'm the mystery guest. You can read about it there while I'm fielding other questions. So we're down here. We moved our trip up by a year, and we took on hedge fund and rich individual sponsors. They gave us money to come down here to research this. This will be put into a book. I would guess probably come in about 4 years, because Australia's specialty metals, of the 46 metals we track, you guys either produce or will be producing 36 of them within the next 18 months. So that's why we're here. Yes, sir.
Question just at third row, if we could, Lou, please.
Thanks very much for the interesting talk, Richard. It is very, very interesting. The thing is, from an investor's point of view, how do you invest in this metal other than gold and silver?
We're not recommending you purchase commodities. We're recommending you buy companies that have these commodities. We're only recommending Australian-listed companies. Last time I checked, and you have to excuse me, we've talked to about 150 companies. I've visited about 50 executive teams. I've been on about, I think it's 37 site visits, and we've written up 6 companies. I'm the boots-on-the-ground survey, and it's there are massive opportunities there. But we're all used to thinking if a company has a $50 million market cap, it must be a bad company. We don't think it's just small and growing. I certainly was raised in that environment as an investor. I would have discounted companies in the past. But one of the things that's very different about the Australian market and the North American market is when companies list down here, they list with a vast number of shares at a very low price. And that gives everybody, it's kind of a very egalitarian thing to do. In the United States, we do exactly the opposite. We list with a relatively low number of shares at a high price. And then the corporate guys just get a hold of it and split it regularly and give themselves bonuses, and it all gets corrupt and ugly. So I hope that answered your question. Any other?
Yeah, we've got one just across here.
Yes, sir.
It's on.
So now, Richard, my understanding is that Lynas' Mount Weld project, Mountain Pass with Molycorp, the grades are fairly high compared to, say, some of the China mines. Is that correct?
Well, Mount Weld is famous for for the quality of its deposits. That's certainly true. And Mountain Pass had a very high concentration of the light rare earth elements. But you need all of them. And the thing is that when we say there's going to be 180,000 tons of demand for rare earth elements, that means we're going to have to supply well over a couple 100,000, because in the process of getting all these, you're going to get all these things like lanthanum and cerium you really don't want very much of, and you're not going to get much neodymium and all these other ones. So this is just another aspect of why things are being very severely played down and underestimated. Pretty soon, anybody who can produce rare earth oxides is going to be huge. Okay, so I'm going to promote myself here a little bit, excuse me. Every once in a while I do something clever and my wife says it's okay to promote it. But in July we have sponsors, and then we give our sponsors our report. About 3 weeks later we give it to our annual subscribers, and then a week or 10 days after that we release it to the general public. They can purchase it for $60, and then if we really like the trend and we want to make sure everybody's making money, we give it away to the entire public later, because nobody wants to pay for research anymore, which is kind of curious. But anyway, when the Chinese made their announcement in June, I was actually down in the Gala Creighton looking at things in South Australia, South Africa. And I sent out an email to all of our subscribers. We got into alkane in April, beginning of April. And I sent them saying, look, this is my take on things. The only 4 companies that I can tell you for sure are going to be in production by 2013, 2014. I've visited 2 of them. I'm going to see Mount Weld when I get out there. You need to buy more alkane, buy Arafura, buy Linus, and buy the Molycorp IPO. We were scheduled for the beginning of August. It went off at the end of July. My guys are just laughing. Okay? Now, it wasn't rocket science. My thought was, we'll get the guys who are going to be there, and we'll sort out the winners and the losers later. But just don't go jumping on some iron company and suddenly starting to say, we've got rare earth elements. We've got rare earth elements. That lead-acid batteries had to be recycling. They had to be recycled. And now it exists in a closed loop. 99% of lead-acid batteries in the United States are recycled. Now that is what we can do when we put our minds to it. Not only do they recycle it, just so you know, remember I had antimony up there as a real poster child for everything that's going wrong. Well, they use antimony to harden the lead in the lead-acid batteries, and we're recovering that antimony also. All right, thank you very much.
Please thank Richard Karn.
Sorry about that.
And as I said, you can have a chance to ask more questions of Richard this afternoon after Mr. Dines speaks. And on that note, the conferences are living, breathing things, and the resources industry is also a living, breathing thing. We had on the panel Gavin Thomas from Kingsgate presenting. Most of you will know that Kingsgate have taking over a couple of companies at the moment. Gavin has actually had to go back up to Thailand. It's actually quite lucky for us because we're running so far over time that you wouldn't have had a break. So apologies from Gavin that he cannot be with you today. We are going to take a short break now. I'd ask you all to be back here at 11 o'clock where we're going to hear from Barry Dawes. And I saw Barry sitting at the front here and he was having a big smile when he was listening to Richard, so I'm sure they get a lot to talk about. So please thank you very much to the speakers, and we'll see you back here at 11.
I'm sorry, I should have brought more material for you. You can go to www.the Emerging Trends Report and get all the details on this, but what we do essentially is we have 3 different levels of sponsorship or subscription. If you sponsor our trip, they start at $5,000 for an individual and multiples of $15,000 for businesses, and what you get is all of our information 3 weeks before we release it to our annual subscribers. Our annual subscribers pay $500 per report, $500 a year. We're looking at 12 to 15 reports. There's a money-back guarantee on that, of course. And what we do for them is usually 10 working days, 10 trading days. After that, we release the report so people could buy a report individually. They're $60 a piece. And then if we really like a trend or we really like a metal, we often release them to the general public. So all that happens is sponsors get a kick all the way down the line on the price, the share price of it. Subscribers get a good bounce, and even individual investors get it. But I need to be perfectly clear about this. One is a lot of the stocks that we're investing in are very, very small cap, and we give our sponsors a lot of time to get in, because if you're a hedge fund in New York running, one of my sponsors is running $15-20 billion, and he only wants to take, a $10-15 million position, which to him is chump change. It takes him 3 months to get in like that. And so it's there's relative value to it, but when you get into these really micro-cap stocks, you need to be careful about your entries and your exits, and I would always recommend that you are planning carefully. Choose your battles carefully. Thanks.